oilstrategy.com.
Hi, this is Chris again, looking at the upcoming Wednesday, August 6th trading session. And as you can tell, I have the economic calendar open in front of you with the Japanese starting right away with a couple of announcements for the session. Coincident index, don't really think that's going to be much, but leading index, that's kind of a brown beige book, kind of brown bag type of announcement where they throw a lot of different things in, and it gives you an idea of where Japan's going. 105.4 is anticipated, and with the Nikkei pulling back recently into a consolidation area, a stronger than anticipated number could push the Nikkei higher. Regional number, though, really shouldn't affect much beyond that. German factory orders could have an effect on the DAX. The DAX has been sold off rather drastically here recently, and of course the euro has been sold off. But the biggest problem with the euro is they may just go ahead and ignore everything because we have broken down to a fresh new low. The real support is down at 1.33 in the euro, so it's possible they may just be trying to push the market down there. Swiss come out with the next important announcement for the day, the CPI. It's expected to be flat. Anything better than that will be good for the SMI, which is the Swiss index, or possibly the Swiss franc, and it works both ways. If it's poor, then the USD/CHF pair could go higher as money goes from Switzerland into the US dollar. So that's a very regionalized, localized type of number, but it certainly should have an effect on the Swiss franc. Looking at the calendar, we have several retail numbers coming out of Europe. I don't think it's going to move the market. If we get a really big surprise out of Germany or France, for example, maybe better than anticipated, then that could be a little bit of a reprieve for the euro, but I'm not looking for that. Manufacturing production out of the UK expected to be 2.1, or in the month over month is 0.6. Stronger than anticipated could give the FTSE a bounce that it needs, and the British pound. The British pound does look like it's perked up a little bit though, so that could just be the excuse to go higher, as 1.68 against the dollar looks like it's going to be pretty supportive now. Going forward, I see a couple other numbers that could possibly move the markets, but really what I'm paying attention to is the crude oil inventories. It's because although it's a localized number in the sense that it affects one market specifically, this is everything in the light sweet crude markets or the WTI market. If we get a stronger than anticipated drawdown, expect the oil markets to go higher. The oil markets did show signs of support at 97 for the day, and as a result, this could be a nice opportunity to go long of a market that's been battered. But if the drawdown's less than anticipated, that could be a major break of support in that market. Okay, looking at the charts, we have the S&P 500. You can see that we are touching a trend line, so I don't see anything out there that's going to move this market specifically on its own. I mean, we're in the middle of earnings seasons, of course, so that, of course, could have an effect. And if we do expect support at 1900, but really, we could get a little bit of a bounce for the day. If that's the case, I anticipate more consolidation to about 1938. Short-term buying opportunity at best at this point in time. Now, the FTSE, as you can see, tried to rally during the day, but just struggled again, formed a shooting star yet again. Below, we have quite a bit of noise, quite a bit of support. I do not anticipate the market falling much farther than this without having a serious attempt at buying pressure. The announcements could move the market today, coming out of Britain, and a move above the top of these shooting stars is actually the easier trade in my opinion, because it shows a real break of resistance. Down here we have so much in the way of noise. The support's going to be squishy, if you will. It's going to take a while to chew through. Looking at the British pound, you can see, as I mentioned previously, we fall initially during the session and turned around and formed a hammer. I think we're going to go back and retest the 1.70 number, and of course, with the economic announcements coming out of the UK, that could be the catalyst. Either way, it's a technical bounce. If we can get above 1.70, then we go to 1.72. But right now, that's my concern. I feel that short-term traders will continue to push us up. After all, we are in an oversold condition, to say the least. And as I mentioned previously, the euro dollar did make a fresh new low. I think 1.33 is calling, and short-term rallies will continue to offer selling opportunities. And with that, we've looked at the Wednesday, August 6th trading session.